Hi, this is Chuck, better known as Low Trade. Today I'm going to do a video on a stock called Fitx. I happened to notice something about it the other day and put a heads up on my board, not knowing a single thing about this stock. Number one, I didn't know it was a marijuana stock, which is really hot, and number two, I knew nothing about its storyline, what the heck's been going on with it in the past. So this morning, when I looked at my board this morning, someone asked me a question about FIBs. So I figured I'd do a video on the FIBs and got into the damn stock and found that there's one heck of a OTC game going on here, so I will elaborate about that a little bit later. Mainly, I wanted to do a video on how the FIB works, for those that aren't familiar with it. I use the FIBs consistently, all the time, anytime there's a run. And FIBs stands for Fibonacci's retracement. If you go to stock charts, their Java chart, you can go up here and you can click on the FIBs symbol. And the way to find where the retracement line is you come to where, well, let's do the first one. You come to where the breakout starts, click and drag up to the top price. Now, I have a rule of thumb for the FIBs retracement. I say that if the first bounce happens at 38% retracement or above, odds are that the stock on the first bounce is going to bounce up and past top resistance. If the first bounce comes from 50%, normally the first bounce will bring you back up to the top resistance. If the first bounce comes from 61%, normally the first bounce will bring you up to 38%. And if the first bounce comes from below 61%, normally it will reach, your target would be, to play the first bounce would come up to about 50%. So we'll look at this first flag, where you have your flagpole here, and then from here, let's go up and draw this. From here down to here and here to here, okay, you have your first run coming. Well, your first bounce starts right at 50%, so you should expect the first bounce coming from that to reach your top resistance. And if you look at it, it's not a direct jump, but it goes up and continues and hits that. So what we're going to do now is put the FIBs on the latest run, which is not a flag yet, it's just a run. So we'll go up, we'll click our FIBs again. We'll start where it breaks out. We'll drag it up to the high. And I'm going to use this gap up again too. Okay, I don't want to get in too much detail, but there is a reason that I chose the high here and the high here. It's because of the fact that there's so much manipulation in this stock that when it broke out way back here, it gapped up, hugely, which means that I just did a post about that. I don't want to get into all that. But at any rate, let's just say that I have a reason for not drawing all the way up the top, and I have a reason for not drawing it all the way up the top. So what we got here is we got our new FIBs placed on this thing. And it bounced from the 38%, so you should expect that after the first bounce that it should go past the top resistance, which it did. It went all the way up to here. Now, we'll go back. That's the FIBs is a rule of thumb. We'll go back to other things. Gaps. I say 90% of gaps fill. As you can see, here's a gap right here. Here's a gap here, from here to here. It filled the very next day. Here's a gap from here to here. Okay? Here's a gap from here to here. Now, that gap is already filled. The next gap down here will probably fill. And we're looking for a reversal in this retrace somewhere before 50% because we want the flag to form and allow us to run all the way back to top resistance on the first bounce. So what's occurred here is since you had this high candle spike and a red Dow, we'll go back to another rule of thumb. In any run, you have a run. In any run, when you see a high candle spike, it's a sign that there's exhaustion in the run and that the retailers are exhausted. They just bought it up too high and they don't think it's going to go any further. So the signal is when you see a high exhaustion candle, expect a retrace the next day. If you get the red retrace, it's a sell day because 9 times out of 10, you're going to get this thing coming back down and giving you a flag again, just like it did here. Well, in this particular case, I'll get into volumes, but in this particular case, the dark side came right back and caught it and gapped it up with our manipulation, and I'll get into all that later. But at any rate, let's go back to why I did this whole first video. Is I wanted to show you how to get your fibs up here, start at the start of the run, click and drag to the top of the run, and then evaluate the bounce to give you an idea on how far the first bounce is going to run before it settles down. So that is done. Now what I'm going to do is I'm going to get into the actual play, the OTC game. We're going to get into this Fitx marijuana play. And to do that, I'm going to want to get into 2 things. One is, I say when there's a game, an OTC game, that you want to find a large amount of shares being issued to funders so that they will have those shares available for sale. So what I did is I went back and I checked the quarterly reports on this stock. Now, as you can see, the September report said that there's 3.4 billion shares outstanding. Okay? The June report, 30th, says that there is 750 million shares available. So if you do the shares outstanding. So if you do the math, I did the math, and I subtracted 3.4 billion. I subtracted 750 million from 3.4 billion, and I came up with, from June 30th to September 30th, 2.7, or we'll call it 2.5 billion shares were issued on this stock. 2.5 billion shares were given to some entity for funding of this stock. Okay, now let's go back and take a look at our chart again. From June, which is back here, to September 30th, which is right here, the price stayed stable. The price stayed stable about 0.025. Okay? September 30th, all of a sudden, those 2.7 billion shares were slowly sold into a double. Why did that occur? Why didn't it take off like this back here? Okay, because this was their attention pop. Normally attention pops happen bing bang. Okay, this one, because they had so many shares to unload, they gradually build up the retail's interest. They build up the retail's interest with constant fluff PRs about how their business is going to grow, and at the same time they manipulated the price up and got a double. Okay, so they sold, I don't know, what are we talking here? There's 100 million. Let's look. There's 100 million. Okay. 100 million shares, and prior to September 30th, it looks like there was around 1 million shares a day traded when there was no price fluctuations. Now, if you come over here after this little run, okay, where they got everybody's attention, now you're seeing most of the days, even though there's no major fluctuation in price, they now, instead of having under 1 million shares being traded daily, they're having over 1 million shares traded daily. So what they did here with this climb was they and their PRs, their constant 3 to 4 PRs a month. What they did was they built up retail attention so that they had to have a lot of retail around so that they could sell 2.5 billion shares in a major run. Okay, let's get rid of this line. So there's the whole OTC game. They do funding back here from June to September, and then they get your attention, and then a month or two, a few weeks to a month or so later, a month or two later, then they start the real run. Well, for some reason, these clowns wanted to get their gains in 2014, I guess for tax reasons. But at any rate, they started it all back here. It was back around, it climbed back down from the double, back down to where it started around 0.0025, and they gave you your new attention pop, a 1, 2, 3 day double. 1, 2, 3 days. It doesn't look like much because it's in the beginning when you're in the sub-zero price range. Okay, then they let go. They come along and they say, bang, 500 million shares in a triple. 1, 2, 3. 500 million shares were sold to retail in a triple because in this 3-day pop, they now have retail interest that was over 1 million a day, all the way up to between 100 million and 200 million a day. So now they got a lot of people around, a lot of cash is getting involved, there's a lot of money getting around on this thing, and they just let go and just sucker everybody in. They got you going. So that's the game. Now, to see if this thing is going to keep going, normally I say for a single zero stock, which it is now running everything above a penny, for a single zero stock, the dark side normally wants 1 million shares. They're into hundreds of millions of shares. So you're talking big money. Also, think about the shares that they have for sale back here. They have 2.5 billion shares for sale, which they probably got back around 0.0025. And now they're selling the damn things up here for 2 cents a share. Okay? 500 million shares dumped there. 100 to 200 million shares dumped here. Okay, so there's 750 million shares dumped right here just in the first week of this whole thing. And it was dumped for anywhere from a double to a triple. Okay. They gap it up to keep it going. And it runs again to keep it going. And then they let it go for a while. They let the retail people settle down and it holds still. And as you can see, the sell-off, the volumes, people are still holding it because there is no major spikes in selling. Actually, the selling volume is falling. They figure, okay, we let it settle for a week, let's get them again. They gap it up again, and here's a couple more 100 million, here's a couple 100 million. So we're going to say $750,000 sold here. We're going to say another 500,000 sold here. So now we're up to billion. I'm sorry, I'm saying million or billion. We're up to 1.5 billion shares sold from here to here. And they're now at, this is a triple, and 2 to 4 is another double. They're up to a 5x. So now they're up to a 5x they're getting, and they're letting it, they're gapped. Oh, it's starting to come down, and they gapped it up again, and they gapped it up again, and now they're going to let it come down. Now, we're adding up, I'm mentally adding up roughly these shares, and I'm saying that from here to here, these guys probably dumped about 1.5 billion shares. That still leaves 1.2 billion for sale. This is why, this and other things is why I feel that this may not be over and you may get a third flag. One is retail is so goddamn interested in this stock. And I found out marijuana stocks are so goddamn hot now. And these people have still got at least 1 billion shares still for sale. So what I'm expecting is that they're going to let this thing come back down and retrace and then stabilize again and keep their people, or keep the retail herd around, and then they're going to take this for the last fling and sell the last billion up higher. All the way back to the FIBs. The question was, at a 50% bounce, would I buy at 50%? No. What I'm saying, not a large position. I would day trade the 50% bounce to the top resistance bounce. There's always a chance, if I would want it to bounce from 38%, because that's guaranteeing me, which it did here, that I'm going to break above top resistance, which it did here. Now, this retrace coming down to 38% and taking off is going to guarantee that it's going to go up past this again. If it bounces at 50%, it's going to lean towards going up and stalling at top resistance. So I would want it to bounce at 38. I would be happy and day trade bouncing from 50, but I wouldn't enter for a brand new trade. These would be small swing trades. I wouldn't enter for a brand new trade until I was sure that the dark side was behind this last run and top resistance was broken. Because that's where you're sure that the dark side is going to drive this thing a lot higher. From here, 50% to top resistance is a day trade or a swing trade for a day or two while it's climbing up there. But once that breaks, you get out of your small position that you're swing trading and you get into a large position to ride this damn thing up big. Okay, I think I babbled enough. Oh no, there was one other thing I wanted to talk about. Okay, we got the, I wanted to talk about the story, the PR story. I was looking at this thing has been PR storying like crazy. But back here, October, okay, there's the end of September. Okay, so this here, from here up, all this news from here up is news while the people have 2.5 or 2.7 billion shares for sale. So what are they talking about? They're talking about building their business. Building their business. Public relations. Oh, look. November, they tell you they got a public relations firm. Why would they hire a public relations firm? So that they could sell stock. and you go up a little bit more. Oh, look, they're going to get a building. They're telling you that. This is all fluff, keeping the interest going along. January is when they actually let it go. You would think there would be super news, absolutely groundbreaking, outstanding financial news telling you that this company is now a juggernaut in the marijuana industry to make the damn thing jump from here to here on 500 million shares. You would think the news that caused this to happen would be so big, it would be astronomical. Not when there's manipulation involved. When there's manipulation involved, there's just emotion causing this. Let's go back again and look at the news. The news on January the 8th, welcome to town. Is that worth a triple and 500 million shares? Welcome to town? No, that stock day was outright manipulation. Just like every day that gapped up huge from one close to the next day's open. These gaps in price don't happen. These runs in price don't happen because of welcome to the town or any of these little marijuana business featured in, you feature marijuana in a goddamn business magazine is not worth a 20% gap up in price for the next morning. This is all, I mean, can you see this? I'm sorry, I gotta calm down. This is so much, look at this gap from here to here. On what? On what news? It's manipulation, people. You're getting fished in. That's why you got to take profits. Every time you see a red day, you see a high candle spike, you take profits. Then you re-enter when top resistance is broken. You see a high gap day and a red day, you exit. Then you re-enter when top resistance, which was right here, is broken. They gapped it up again. You should have been in and out of this thing 4 times. Now, you're lucky because they still got 1 billion shares to sell that it just kept going and they kept bringing it and they kept pushing it and they kept pushing it. And they're probably going to push it again. But for safety-wise, in the future, when you play these things, you may not have someone that's got 2.7 billion shares for sale. They may only have 100 million shares for sale. And they could run out, and one of these red days when it comes down and the flag starts coming down, they never stop back in to keep it moving because they sold all their shares. So with this particular stock, it's happening very quickly, and it's being constantly manipulated higher and higher and higher. In everything you can see about this stock, it is 110% dark side manipulation, selling 2.7 billion shares that they got around 0025 to some poor retailers who actually think it's worth 6.5 cents. Okay, I'm done ranting and raving. I hope I helped you understand what the heck goes on with these things.